Good morning, everyone. Today is the 3rd of Feb, and I am Shuchi Runta presenting you the morning market update. The Nifty lost 6 points over the day to close at 17,610. The FMCG and the IT sector were the top gainers. The advanced decline was neutral. Technically speaking, Nifty remained within the lower range of the budget candle. The bearish bias still remains. The daily chart setup is in the Dow theory sell mode and it trades below the averages. The bulls will get some advantage only above a close beyond 17,800 and 18,000. The index still trades and close above its 200 exponential moving average. In spite of the damaged weekly and the daily charts, the fresh bearish momentum will pick up below the budget candle low. 17,300-350 remains an important support zone where multiple technical indicators coincide. So for positional traders, the budget candle range is a no trade zone and fresh positions beyond the range can be taken. For short-term or intraday traders, bulls will get some momentum above 17,735. Talking about Bank Nifty, it stands at an important level at 200 exponential moving average and a Fibonacci support level. Hence, a bounce can be expected till 41,500, 42,000 levels. Coming to the US indices, Dow remains flat, whereas Nasdaq had over 3% rise, followed by Russell 2000 at 2% and S&P 500 around 1%. European markets also show strength. SGX Nifty indicates a higher opening. To conclude, we will continue to have stock-specific actions. Levels for the day: Nifty support will be seen at 17,490 and 17,440. Resistance 17,730 and 17,820. For Bank Nifty, support will be seen at 40,080 and 39,500. Resistance will be seen at 41,000 and 41,500. Thank you.